Hello, everybody, and happy holidays, whatever you want to call it. It is between Christmas and New Year's, and I hope everybody had a good Christmas. Um, I had a good Christmas myself. Christmas kind of just quickly. Quick Christmas is one of those situations where my kids are too old for like real Christmas, fun stuff. But I don't have any grandkids either. So it's like, it's kind of that tweener stuff. So, anyways, it's more about spending time with each other and having nice Christmas dinners and that kind of stuff. And then they go off on their own, and I'm back to being stuck, here. Anyways, what I want to talk about is we have this situation where you know everybody wants to take trades. Everybody, that's not off on a vacation somewhere or doing something, and trading can get expensive if you don't have a good plan until the market starts moving again. And I mean, the market's really not going to start moving unless there's news. Market's really not going to start moving again until we get, I'd say, shoot, maybe January 10th, 15th, something like that, maybe. But anyway, so what I want to just talk about is just what am I doing until we get to where the market's doing targets and motions and targets and motions and things like that. Well, what I'm doing, or what I intend to continue to try to do, and I have been doing, and I've talked about it already before, but I'm going to specifically discuss it today, and that is I'm going to trade sides of the market. I'm going to look for sides of the market and trade them. Well, what are sides of the market? Well, in my strategy, you remember I talk about a 1 minute gold line, which is a 1 minute 9 EMA, a 5 minute gold line, which is a 5 minute 9 EMA, a 5 minute red line, which is a 21 SMA 5 minutes, and an overnight open. Those are the three main trigger lines. Well, only two of those are trading sides of the market. The other two are momentum trades. So momentum trades are the two gold lines, the 1 minute 9 EMA and the 5 minute 9 EMA. And I've completely eliminated those until we get back to where there's enough participants for push, pull in those momentum sequence trades. So I'm going to show you what I mean by that on my charts. And then so what I'm only looking for is I'm only looking for 5 minute red lines, which is your 5 minute SMA, which is helps if I write it on here, but it is a 21 SMA, 21 SMA, and I talk about it in the description below. And it's, I mean, it is, it it is the line that I would trade if you're patient and you really want to trade and make money. Is that line right there? That line right there is the most important line I got on my chart. Okay, now the other one is the overnight open, okay, which is the open price at 6 p.m. Eastern Standard Time from the day before. Okay, and there's a system on how to trade that. There's a system on how to trade the 5 minute red line too. So, anyways, but what I'm going to do is I'm going to show you on my charts today what I'm talking about. Okay. Now, I only traded oil today. Okay. But I had the system running on the NQ. I'll show you why I didn't trade the NQ, even though the system made money in the NQ. I'll show you why I didn't trade the NQ, and I'll show you the oil trades. The oil trades that I took two oil trades, and I'll walk you through, I'll talk you through what it is I'm looking at, what it is I'm trying to experience. And then I'll glance at the RTY. The RTY, I think, only had one trade today, and it ended up being a break even. Which again, when I show you the RTY, you'll see why, and you'll also see why the NQ just didn't do crap. I mean, it just didn't do crap. I mean, even though now the NQ made money today, but you had to wait till the afternoon to make money in it. In the morning, it was just chop, chop, chop. I'll go over that. My system did that. I didn't trade it and I have a rule as to why I didn't trade it, but I let the system run, and you'll see what it did. And I'll explain the rule. But anyways, so that's what I'm going to do in today's video. The other thing I'm going to do is I'm going to talk about just quickly for those of you that have this indicator that I'm going to that is part of what I have. The final I have been for those of you that don't know, I've been integrating the overnight open into the 5-minute red line, 5-minute gold line, 1-minute gold line. And that integration has been extremely painful. For those of you that think you're geniuses and are like, well, why didn't you just do it separate? Well, because the reality of it is if I do it separate, then people have to be trading two different charts at the same time, trading the same damn instrument, number one. Number two, you don't want to be looking at a 5-minute red line trade if you're currently in an overnight open trade. Remember the sequence of power. The overnight open is more powerful than the 5-minute red line. The 5-minute red line is more powerful than the 5-minute gold line. The 5-minute gold line is more powerful than the 1-minute gold line. The sequence of how those things are looked at for trades is what the system takes into account as it's taking trades. So you wouldn't want the 5-minute red line sitting over here by itself trading when the overnight open is competing against it. I mean, I'm just trying to be a smart ass, but I'm just trying to be honest. Jesus. I read some of the dumbest stuff. Anyways, I would think everybody would want it all on one screen, one chart. That way you can have one chart over here for the NQ and one over here for oil and one over here for gold. By the way, gold last week, wham, 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 wham. Gold was making some money. Today, oil making some money. I think the commodities are the ones that are doing anything during the holidays. To be honest with you, it's not the market itself. So let me show you that stuff, and we'll go from there. All right, talk to you in a second. Okay, so first off, what I have is I have the NQ. So I'm going to start off with the equity markets, and then I'm going to go to the commodities. Again, remember, I talk about how in this, I didn't take these trades that the system's fired off. I'll explain to you why I didn't. And then I'll show you the oil trades, and I'll explain to you why I took them. Okay? But anyway, so this is the NQ. So the NQ was a chop market. Oh my God. I mean, this is just ugly. Now, how do you know it's ugly? I'll tell you how you know it's ugly. All right. This is the overnight open right here. Okay. This is, I mean, as soon as this thing collapsed down to the overnight open in the morning and kind of meandered its way through it and then back up and then meandered its way down and then meandered its way up and then meandered its way back. Now, there's nothing there. I mean, I've talked about this before in previous videos. When the overnight open is the place that price is hanging out at and not showing any signs of going away from, you don't want to be trading. So, but what I did is you'll notice right up here is I don't have the 1-minute gold line and I don't have the 5-minute gold line. System's running. I'll watch this. Boop. There it is, by the way. There's the 5-minute gold line. Boop. There it's gone. Isn't that? That's like Christmas lights, isn't it? Anyways, so the market opens at 9:30 right here. slammed right up into the 5 minute red line, slammed right back down into the overnight open. And then the system's on here. It's just on. I'm not trading it at this time. I've got it turned. I would have it turned off anyways because we're too close to the open. So, but I mean, it took if the system was on, it took a trade here, came back out, knocked it out at even. This would be an overnight open because, by the way, it actually met the rules for an overnight open trade. Doesn't meet my rules for the time of day. But anyways, I just had the thing turned on to see the trades, but I had it turned off to not take trades with my money. But anyways, until I wanted it to take trades with my money, that's a different story. So anyways, because you can turn it off too. I mean, you can turn it off. See, off, on. Anyway, so down it goes, boom, 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 up it goes. So this is an overnight open. Now, why would this otherwise pass as an overnight open trade? I'm going to tell you why it would pass as an overnight open trade. Because we hadn't been here in a long time. That's rule one. Okay, we hadn't been here in a long time. That makes it even more exciting. We hadn't been here in a long time, since yesterday. Okay, so that's exciting. All right, that's like rule one. I got that kind of coded in exactly what those rules are, but it's looking to its left. Okay, then rule two is you got candle highs. See the candle highs on your longs? Your candle highs to the left are lower than your candle highs to the right, i.e. the smooth pullback. And then once it hit the overnight open, it started triggering for the potential entry, bam. Now this honestly right here is a wonderful place to enter from, because your launch spot, let me blow this up here. Your launch spot right here, your launch spot is extremely close to your overnight open. That means once you take it, you've got that overnight open below you pushing price up. You're not taking it out in la la land. I do like that. But anyways, but it's the wrong time. I mean, shoot, this is 9:38 in the morning. Anyways, it goes up. It went up high enough to go to break even. That's what this candle is right here. It's set, I think, for 30 ticks on this. I can't remember. I think it's 30 ticks. And then bam, back down. It got knocked out at even, rolled through, rolled up, rolled through, rolled up. This is just a hodgepodge. And then we rolled down and we created space. So that's another thing we're looking for. Look to the left. You're looking for space. Okay, so now we have space. And once again, lower high. High or low. Now we're going for shorts. Lower high, lower high. Lower low, higher low. Jesus. Higher low, 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 higher low. Oh man, this damn thing opened and closed above the overnight open. No trade. But see, these diamonds here meant we were looking for a short. Which, by the way, to be perfectly honest with you, this literally had the makings to be a beautiful setup, because you had the push through, you had a new daily low. That's what these red lines mean. This is creating a new daily low. When I mean daily, I'm talking about since 6 p.m. the day before. Okay, and then you run up, bam, right into that, and then wow, that is normally a fabulous setup. Didn't happen, blew back over. So then you get this creation of this 5-minute red line. Remember, I'm only looking for two trades up here. 5-minute red line, overnight open. It's the only two things I've got turned on here too. So anyways, it created a 5-minute red line. It went up, created break even, boom, came down, knocked it out, rolled over. Did a 5-minute red line trade right here again. rolled up, came down, knocked it out, lost $300. Woo! Man, that's brutal. Wow, that's brutal. That is freaking brutal. All right. Plows through, rolls up, plows through, rolls up. Then all of a sudden it finally creates with your lows going back into your 5-minute red line. It creates a 5-minute red line trade. Boom, down it goes to break even at this candle right here. And I'm telling you, this is like, it's just, I mean, it's like pulling teeth, because in normal market conditions, when there's plenty of players in the market, this setup right here, lower low, back up into the 5-minute red line, back up into the overnight open. This right here is a money maker. This normally might meander a little bit to your right, but when it falls, it's going to fall through the floor. Well, this one fell, didn't fall through the floor. I mean, that just tells you right there, we got problems. All right. So, I mean, this is at 11 o'clock. Rolls back up, knocks you out, because now your stop is trailing below the pivot, following pivots, boom, knocks you out, made $130. Comes back up for another 5-minute red line. Beautiful setup. Here's your possible entry. Here's your possible entry. Boom, here's your entry. Boom, down it goes again. Should fall through the floor. Should fall through the floor. Doesn't fall through the floor. Once again, knocked out at $50. So, well, now your $300 is now $120. I mean, it's just painful. But again, why did I not trade this instrument? Because we're hanging out at the overnight open. If we're hanging out at the overnight open, then that means the market makers haven't chosen a side. They're not pushing it to a new zone. This is just going to be a consolidation, painful day. All right. Once again, boom. We created this. Okay, so now we got higher lows, higher lows, higher low, higher low, higher low, higher low, reaching touch one, overnight open, blew through it, no trade. Painful, painful, painful. Tried it again. No trade. Then it just falls out of the sky at 1 o'clock. At 1 o'clock, it just falls out of the sky. Literally just falls out of the sky. Comes back up, hits your 5-minute red line, entry right here, boom, down, up, another break even. I mean, this is just getting painful. Goes up, doesn't have the smooth pattern that we're looking for a 1 minute, for a overnight open, blows through it, blows back down. Once again, creates the rules that we need for a gap space, creates the direction that we're looking for, which is to the south, because we're south of the overnight open. We don't want to trade back into the overnight open. Remember, we're picking sides of the market. We're looking for sides of the market. Comes back up, boom, down, up, even again. I mean, this is getting painful. This is getting painful. And this is exactly what it's like when you don't have follow through. So, does it again, another one at even. Then finally, smooth pullback, smooth pullback, smooth pullback, smooth pullback, right into another touch one. Why is this a touch one when this is a touch? Well, because looking back to the left, we have two things. We're looking for space and we're looking for time. Space, time. Space, time. We passed the space rule right in here, between here and here. So we've got enough space. We've gone down to a new level before we rotated our way back up. We created time because we went from 1337 to 1438. We passed the time test by 1 minute. That's freaking insane. That's actually insane. I just realized that right now. And then we had the smooth pullback. 1, 2, 3, 4, 5. Here's your entry. There's your rotation. There's your trade. $1,000. The overnight open. Sides of the market. If you'll notice, every one of these trades that this thing is taking is a side of the market trade. Only looking for longs on the 5-minute red line when it's north of the overnight open. Only looking for shorts on the 5-minute red line when it's south of the overnight open, because you do not want to trade back into the overnight open. But again, I didn't trade these things because the overnight open, because we're trading around the overnight open. So what happened later in the day? Well, later in the day, we create a new pivot low. Very important. Rotated our way back up into the 5-minute red line. Okay, back into the 5-minute red line. And then, bam, 750 more bucks. This stupid thing, even though we sat here and all that junky junk, when the afternoon came along and it started to actually move, when the market actually started to move, it made $1,700. I mean, that's pretty amazing if you ask me. Anyway, so let's talk about the market I did trade, which was oil. And I'm going to bring that over here. All right, wait, hold on. Let me see. Let me find something here. What am I looking for? Hold on here. I have the wrong market. Hold on here. Oh, yeah, here it is. Oh, it is oil. Yeah, this is oil. Sorry, this is oil. All right, so we got oil. So, well, we had, now, this is a holiday week. So you got oil inventory report. Oil inventory report normally on Wednesday. Today is Thursday, so it happened today. So we want to wait for all that ridiculousness to end. I talk about that. I don't want to trade oil until the stupidity is done. And that would be the oil inventory report. Well, can anybody see on this chart when that happened? Wham! Right into the overnight open. By the way, look at how strong that overnight open is. Ran right into the overnight open. But, I mean, I'm not looking to take these trades because of what's going on with news and things. But let's just kind of look at this. All right. So here's oil. It opens at 9, comes down, and it actually, ironically, it sits right on the 5-minute, the 21 SMA, back to the overnight open. Now, why would I not take that trade? Well, one, I'm kind of not a big fan of trading in before the oil inventory report. The second thing is you want to have enough space from here to here for the trade to be profitable, risk reward wise. And even though that is a big trade, it's just, I mean, I'm just not going to do it. So I waited. Now, but granted, it worked. I mean, it worked beautifully. I mean, it really did. It worked beautifully. Just like it worked beautifully here when it came up and hit the overnight open. Now, see here, you're getting too close to the report and all that kind of stuff. Boom, here's your inventory. Boom, it goes up and hits your overnight open again. And then it just slams down. Now, so I'm sitting here, okay? I'm sitting here. I didn't have the nerve to take this, okay? But what I did do is I said, whoa. Okay, now we slam back through the 5-minute red line. We created new pivot lows. Not that that really matters, but it does. I mean, you know, price action wise, it does. And and then it slammed right back up into, right? I mean, literally, look at that, to the tick, right into the 5R, my baby, my favorite, the 5-minute red line. After we get past all the craziness, and we're going to use a direction trading tool. This is a direction trading tool. So the 5-minute red line is a direction trading tool. So what does it do? It tells us, this tells us right here, we're going south. Okay, the market wants to go south. The overnight open pushed price south. It busts through the 5-minute red line, comes back in, sits inside that 5-minute red line, and wham, there's your entry. There's your target. One contract, $500. 50 ticks, $500. I mean, now I know that looks crazy, but that's how far this thing is set to go. How do I know that? Well, let's go look at it again. So then it rolls back up. Now we created again, let's go look at this. We created a new recent low. See this? We've left this consolidation area up here. We created a new recent low. This broke it here, okay? And then this confirmed it. We ran back up, hit that 5-minute red line again, rolled over, bam, another $500. That was it. Those were my two trades. So one contract each. And I don't know what it did. I guess the rest of the day. Wow. Let me turn the 1 minute gold line. Oh, so the whole rest of the day it just followed the 1 minute gold line. Interesting. Okay, I didn't know that. Turn that back off. So that's it. Those were my trades, but I'm looking for a side of the market because we don't have the traditional traders that we normally have in the market, participating in the market for the momentum trades. The momentum trades being the 1 minute gold line, which is the 9 EMA 1 minute, and the 5-minute gold line, which is the 5-minute 9 EMA. These two lines right here. I don't have the confidence in them to trade them. Now, like see, here's one right here. Came up, hit it, boom, went down. Now it went down, but I'm not looking for scalping trades. Okay, so let's kind of look at this one. Here, this one came up, down it went. Okay, but I'm not looking for scalping trades. I don't want to scalp the market. If you want to scalp the market, I mean, you can do that all day long if you want. I mean, here's your little, you know, I mean, you can scalp the market all you want. I don't like to do that. Okay. Let me turn those back off. Let me just for a second, look for the RTY, which is another equity market. And let me see if it did anything today. Here's the RTY. I don't remember. Oh yeah, that's right. It only took one. Okay, so all right. So here, all right, yeah, okay, all right. So here's the RTY. Now, unlike the NQ, the RTY decided from the beginning it's going to be a down day. It's going to be a down day. They decided from the beginning it's going to be a down day. Okay, so since it decided from the beginning it's going to be a down day, I mean, it tried an overnight open right up here, but then it broke through it, rolled over, came up. It didn't pass the rules here. Otherwise, let's look at this. It didn't pass the rules here. Otherwise, that's a beautiful overnight open. What is the rule that it didn't pass? I'm going to tell you the rule it didn't pass. It didn't pass the gap. There's not enough space in here for this to be a thrust, push, and then a bam. That's what we would be looking for. We would be looking for that kind of stuff. Sorry. People texting me while I'm trying to do this video. Anyways, so nothing here. Rolled through and up. Didn't pierce, down, didn't pierce, down, did pierce, but went through. So, I mean, we're just looking at garbage here. I mean, just garbage. Okay, I'm going to blow it up. So, did pierce, but went through. came back down, rolled up. Now, why did we not take this one? Well, because we didn't get enough of a gap here on the north side. Again, we're looking for the left. We're looking for gaps. We're looking for gaps. This is a gap in space. This is a gap in space. We need space to our left to confirm that what we're doing is we're reaching our way back. We're out of consolidation for a flush. Okay? So, didn't have that space in there. Rolled over, rolled up, damn down. And then ultimately, we had it. Damn it. Right here. Look at this. New daily low. Okay. I like those. Daily lows or daily highs. Rolled back to our 5-minute red line right here. And then wham. Now you might say to me, well, Bob, why didn't you take that trade? Well, because this candle right here was just too big. That's why it's black on here. It's too big. I'm taking the trade kind of out in space, away from this 5-minute red line. I would much rather have had it higher up and then my entry. But anyway, so there's one we missed. But I mean, you got to be consistent. You got to try to not take trades when you're way out somewhere so that your stop loss is hanging out in limbo land instead of, where it's actually defending you. Where you've got an army between you and your stop loss pushing price. That's really what the intent is. The intent is to get yourself close enough to those moving averages so that your stop loss is on the other side or right there so that you got an army defending your stop loss. The people pushing south of that moving average. So anyways, it didn't take that trade. No big deal. And then it attempted to do it here, rolled up, rolled down. Now, let's talk about this. I like this. So see this right here? This is the space. So when this one blew through, okay, you see that? That was the space. That's the space that you're looking for to the left. All right, so now we passed the space test. Then we rolled up and we came down. But we didn't get any entry. Why did we not get any entry? We didn't get any entry because I have a little setting in here that if we're too far from the overnight open, we're not going to trade back into it. Because what you're going to find is, like I've talked about, you're going to have bigger time frame moving averages coming in behind it that continue to push in the direction of the down market if you're too far away and it's later in the day. Well, this is 1:30, 2:30. This is 2:30. This is 2:30 in the afternoon. So no trade there, which ended up being a good thing because you would have gotten slammed for about a $300 loss or $200 loss or whatever it is. And then down it goes. Here you got your set, trade, enter, boom, break even, back up, out. That's it. And that's the market. That's it. That's the RTY. So the equities didn't really show much promise. I mean, there was two RTY trades. One it didn't take. Might have made you a couple $100 or whatever. Then there was this one right here that if you're going to target, which target on that one was way down here, I think. Yeah, target's right here. You can see the target, just not there. Just not there. And it's unfortunate because when you have a break, when you have a fake break, false break back against the momentum, what I really look for is that rotation back inside the red line, boom, bam. That's normally take your money, put it in the bank, and call it a day. Anyways, that's what I've got to show you guys today. I don't want to show you gold. I don't even think gold took any trades today. I don't remember, but I do know last week gold was on fire. Gold was on fire last week. It was just ding, 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 ding. I mean, it was just hitting trades and making money like crazy. Anyways, but again, today I counted on old reliable oil. I was patient to wait till after the news, the inventory report stuff, and then I let the overnight open show me the direction that it wanted to trade oil, which after the news, they'll tell you what they thought of the inventory report. And normally when they run it one way, that's because they really intended to run it the other. And let's just for fun, while we're sitting here, let's just look at that. So oil ran down to $71.72 from the overnight open, which was way up at $73.80. Okay. After the inventory report. Look what they did. Look what they did right when the inventory report came in. Wham, wham, ran it straight up. When the reality of it is, they knew all along the report meant they had too much damn oil, and they were going to run it down anyways. And that's exactly what they did. So wait about a week and go fill up your car with some gas, and I'll talk to everybody later. Have a good day. I'm going to have this thing debugged and fixed for those of you that use it with the overnight open. I'll have that here very soon. I have, every time I turn around, I got a bug I got to fix. I fixed 2 today. They're minor, but I want them right. Talk to you guys later. Bye.